Good morning, everyone. Welcome to our Friday morning trading room. Hang on a second here. We'll get the screen share going. There we go. So yesterday, with the waiting on the FOMC report, turned out to be a bit of a nothing burger. The market seems to have already factored everything in. Prices did not make any violent moves, higher or lower. Kind of continued within the larger sideways trading range. I won't roll back here on the Eagle. Let's take a look at the daily. That was yesterday right there. Just a chop fest overall. And if we draw a trend line, we're awfully close to where the sellers might be interested in trying to knock this market down. Certainly yesterday's session, being as neutral as it was, leads me to believe that today might be a little bit more bearish, maybe. Trend lines, by the way, very often will hit right on the mark, but not always. Some people draw trend lines across the closing prices. So if you did that, your trend line would look more like this. In which case you can see we're probably already there. But at any rate, that's just a little bit of an overview. It did make the market more bullish overall, and I think that we may, over the next few weeks, see another retest of the recent swing low. And then perhaps a bigger rally to follow. Right now, the day starting on a more bearish note. I keep saying I'm going to do the first in-sync eagle signal. It's right there. Let's see if I can still get on board with that. Okay. So all I'm doing here is I'm simulating the first in-sync eagle signal. I got in a little bit late, of course. The idea is, oh, is that the first signal or am I late? No, the band is in sync here. It was not in sync here. So what I'm looking to do is take advantage of that first signal of the day. The idea is that very often the market will have a little giddy up right out of the gate. They did slip me a tick on that. You can do the same thing actually on the Falcon or the Raptor. And you're just looking for that first signal where everything is in sync. So we've got bearish clouds. We have a bearish signal. It doesn't have to be one of the high probability signals, but it is nice if it is. And I'm going to roll my stops here a little. Come on, stops. Well, there we go. We hit the profit target. I didn't need to worry about that. So hooray! The first in-sync eagle signal working out. I haven't back tested it that much, but just reviewing it on a daily basis today, that would have been 5 for 5 this week, hitting the high probability profit objective on the Eagle and the Raptor. So, well, my trading day could be done already. I found my high probability signal. and I hit my profit target. Hooray for me. And now it looks like, as is very often the case, after we hit the high probability profit objective, the market starts to find a little bit of support. Hey, way to go, Ray. Ray says, I got my signal on the hawk, and I've also hit my daily profit objective, so I'm done for the day. Good job. Obviously, we'll keep the trading room open for a while, but it is an important principle to get around. Probably 90% of the people who come to me for private coaching, their number one problem is over trading. All right, getting a little bit of a bullish pushback now. The bar is seeming to be a little bit slow. That's all right, though. Yesterday, and even the day before, the morning session was a bit of a chop fest, just going back and forth. And I know Stephen would be inclined to throw a bit of a trend line below here and look at a break, a hard edge bounce. We're into the hard edge bounce, so a break here of the hard edge. There it is. There's a number 3 signal. Probably give up a couple extra ticks looking to short, but there is a possible bear flag forming right here. See, so we have the downtrend, we have the little bit of a consolidation. Trend lines can be very helpful that way. Well, looks like I can throw it right back there again. Here we are one more time. This also a hard edge bounce, even though technically it looks like we're a tick short of that hard edge, but still visually you can see it's a hard edge bounce. Would definitely be a more aggressive trade. Here we have it on the Eagle as well, same thing. We're against the ATR, so if you wanted to use your ATR, you could either wait for the bar to close below the ATR, or you could place your order below the ATR. I don't know if I want to try 2 contracts on that, though. Now this is just your basic with trend type scenario. You know, you're looking at your chart and you say, okay, I think I have a downtrend. This is a little bit of a consolidation phase. If the market breaks out from here, I'll look to short. That's all that is. You're just looking for the market to continue trend. Trend is the path of least resistance in the market. All right, here now is your number 3 signal. So again, you could have anticipated that. You could have had your signal there. It looks like we got a chance here for a second push. Well, that worked out well. It came down quick, and it looks like the eagle signal also working up pretty good. I'll get my stops in a little bit tighter here now. Maybe set my bar high low. Oh, well, didn't even need to worry about that. Your biggest challenge, perhaps, as a trader is going to be trying to decipher whether the market has a trend or not. The last few days have been tough because we've looked at a lot of this sort of stuff where the market is just back and forth and back and forth, and you can't really get a handle on what the market is doing. That's why I suggested yesterday on those choppy days, sometimes it's helpful to look at a time-based chart, you know, maybe a 5-minute or a 15-minute, to try to get an idea, is there actually a trend here that I'm not seeing? Because of course the mean wrinkle bars, they're a range style bar, so they're just going to print as soon as the range is met. So if you have a market that is rangeless, it's going to end up looking like this. You're going to get a lot of bars. But sometimes if you have the perspective of another chart style, like a time-based chart, you may actually be able to discern a trend. Now today, the trend was a little bit easier to spot. It did look like we have a little bit of a downtrend. There was a little bit of a pullback, so we just looked to take the with trend signal. And it's still relatively early. So it seems like we're still getting some decent follow through. Now it looks like we're going to test the top end here. If we break a significant swing point, which I think that qualifies, then we can expect 2 moves in the direction of the breakout. There's move number 1, and then we would be looking for move number 2. So that could make us a little bit more bullish if we break this swing point. Mickey asks, I took the Eagle signal at 8:31 Central or 6:31 Pacific and was successful. Was that one not in sync? Okay, I see what you did, Mickey. You just took the first signal. You know what? I think that probably was. You know, the cloud was just turned over. It's a little bit discretionary at this point, right? Because it is turning over. It's very close. This was obviously today's in sync signal. Bear with me here a second. I'll roll back to yesterday's. We did have a day this week where the signal was a little bit later coming. Oh no, that one's in sync too. So we have a buy signal with a bullish band. All right, I'm going to make everybody dizzy here. I'm going back one more day. There was one day here where we had to wait a little while for the signal. No, that one too. Oh, no, wait a minute. Oh, this is the day. Okay. So the market opens right here. Oh, I think this was the day that we had to wait out the move. So this would have been the in sync signal here. See, because, well, I don't know. Let me roll this over so we can pretend it's real time. Okay, so the market opens. We're waiting for our signal. Well, you know what? It's a little bit of a discretionary call. The band technically has turned over. You certainly have a second push opportunity, which, when in doubt, not a bad way to go. Yeah, that's probably your first in sync signal. And then you end up taking a little bit of heat before the market eventually, if I remember right, heads lower and finds your profit target. There we go. Yeah, this was the day I was thinking of. Yeah, the idea is that you want the band to be in sync with your signal bar. Likewise on the Raptor. Most times it doesn't hurt to get in a little bit early. Yeah, that again, a little bit of a discretionary call, Mickey, but like you said, it worked out. I took this one here and it too worked out. All right, so we've got a bit of a bull break. It's going to change the tone of the market here a little bit, going to make us a little bit more bullish. All right, we'll see a little bit of a retest here shortly. Ray says there was the Falcon had a good trade at 9:30 Eastern also, but I missed it. Maybe Mark got it. I don't know. Let's see here. Supermarket grab it. Oh, that late filter entry signal right there. This is also a nice trend change signal. Also, you know, coinciding with that eagle signal. Years ago, there was a fellow in the room. His name was Derek, and Derek was also a big fan of the Falcon, and he was one of the first people who approached me about this first signal of the day. And what he did, he just essentially scalped in and out, I think, for 3 ticks or something like that. And all he wanted was a winning trade. That's it. He just wanted a winning trade to start his day. I think it was a little bit more psychological than anything. Oh, here's good news for Friday. David said oil's now below $49, $49.90 a barrel. Gas should be free soon, and we'll get a set of dishes to boot. Perfect. If only. It will be interesting to see what happens with oil futures over the coming years. It won't be my problem, but the British Columbia government just passed a law that by the year 2040, I think all new vehicles sold have to be zero emission. So that will be something. All right, we've broken here this resistance zone. Now we're retesting. We're looking for a couple things. We're looking for a test of the extreme being the low down here. We're looking for an excuse to buy. So obviously we want to see the buyers pick it up because looks like they started their buying down here around 68, 84, 85-ish. If they slide too much lower, it's going to negate that breakout a bit. Hey, way to go, Mark. Mark says he got in that late filter entry signal on a second push. Back here. He's got a better fill and bagged $500 on 4 contracts. Nicely done. All right. So just going back to market logistics, we're expecting a buying opportunity, right? So we've got one right there. I'm a little bit late on that, but I'm going to pop in here on the Raptor. We'll take a single. Now, you'll note that the bands and the whole formation is not that clean, right? The clouds are actually out of sync, as is here with the Falcon, as would be here with the Hawk. The Eagle did have a decent red bar buy, but my point is, from the market structure itself, we're expecting it to be a little bit more bullish. So you can buy really any buy signal you can get on board with. Oh, it's unfortunate I got in a little bit late because it would have been very, very close to my profit target. All right, let's see if we can't get another little rally here and maybe at least grab a break even. Okay, up to the break even, and come on, a little bit more. There we go. You can do it. You'll notice we're also printing a cloud crossover signal at this point. But the fact that we kind of knew what the market was going to do ahead of time would have allowed us an earlier entry, a better entry, a little less stress, because now the problem with this number one signal, of course, is the proximity of that swing high. Oh, way to go, Mark. Mark says, finally got my final order from the Army today, putting me in retirement. It's finally over. On to the next chapter of my life, trading and fun. Way to go, Mark. And even though I'm Canadian, thank you for your service because, of course, the Canadian military relies on the American military. All my friends that are in the military here on the West Coast, of course, most of them are in the Navy. They always have the best stories. And I don't know if I had a do-over, if I wouldn't join the Navy with them. I don't know. Of course, they only remember the good times. All right, we're struggling a bit here. Problem is this now a test of the extreme of that? Are we going to end up going sideways? These are the kinds of questions you want to ask yourself when you're taking a look at the market, right? We know there's going to be two moves higher after this breakout. Well, there's move one. Big question now is that move number two. Typically, the second move has a little more to it, but not always. Oh, 21-year career, military service career, both between the Air Force and the Army, Mark says. I heard that the Air Force has the smartest enlisted people because in the Army, the generals put the soldiers out on the field and they tell them to go fight, and in the Navy, the admirals put the sailors on the boats and tell them to go fight, and in the Air Force, the airman puts the captain in the airplane and tells him to go fight. Oh, there you go. There's a perk. Mark says, yep, and the best looking women too. Well, there you go. For those of you looking to expand into a military career, Mark gives the nod to the Air Force. And I'm getting some kudos here and some thank yous, Mark, from other people in the room for your service to your country. So there you go. Now you can go buy yourself a bigger hat. All right. Well, we're kind of waffling back and forth here. Still hard to tell whether we've got a bullish move or eventually a bearish move. If I hadn't stopped after my first trade, I would certainly be stopping now after my third trade. I've made 3 trades. I'm in profit. My day would be done at this point. While we're waiting here, I got a couple people asking Mark what his rank was. What did you finish out at, Mark? Make sure I don't need to address you as Colonel. Still this back and forth. I don't know if I'm ready to qualify this as a sideways trading range or not. You could call this a sideways range. We could look for a bearish break and then for the retest. Mark says I finished at E8, First Sergeant. Ray says, very good, Mark. All right, there's the breakout. Here's the retest. Now, this is a little bit more aggressive because the trend is in flux. But having seen that breakout, you could throw a just in case order below that bar. The market attempting to break out below those recent lows. Here on the Hawk, we've actually produced a first micro macro cross already. We've got a late filter entry signal working here on the Falcon. We've got the warning dots, but no signal just yet. Like I said, this is going to be a little bit more aggressive in here now with the crossover, cloud crossover signal on the Raptor. So, as I pointed out, a little bit more aggressive, but we've kind of got the breakout, the retest. Will the trend continue in the direction of the breakout? That's the $64 question. Just reading Mark's comment here. Mark says my little sister, 5 years younger, is a command sergeant major in the Army. She's been in a total of 30 years. Wow. And had I stayed, I would have been up for an E9 in 2 years. I'm 57 though and want to enjoy the rest of my life without any more aches and pains. I can relate to that. All right, well, looks like we can close these orders out. I'm a little reluctant to do much because we are back inside this larger trading range. Although, if you were inclined to shoot a trend line there, there's your trend line break. You could look for another buy opportunity, which looks like we got a cloud crossover signal right about that same time as the break, as well as this trend line touch signal here on the Falcon. And we even have a, well, you know what, that's a really, really late second push entry because we'd already be at our profit target. All right, we'll just let that one go and watch, but and as is often the case, the market slowing somewhat after hitting our high probability profit objective. Okay, we're getting a little bit of follow through, so definitely that trend line would have been a good timing tool getting us into that trade. We did see the breakout and the failure, which also made the market a little bit more bullish, perhaps. We're trading in slow motion. That number one signal, like I said, working out really nicely. Even the second push, even though it was very, very extended, also now hitting its profit objective. Ah, let's see here. Mark says, I took a chance on that late filter entry to the upside and picked up another 400. That would be this one right here. A lot of times I've been waiting for a second opportunity to get a better fill on those late filter entries. And I've been getting better fills and a bit more profit as a result. If I get under the printed hash mark, I'll move my all in, all out profit a bit wide, profit target a bit wider for more money. Yeah, so if the bar prints, you throw in your hash mark or your entry, and then the market will fill you somewhere around there. I had a trading friend who did the same thing. He would let his signal engage and then he would try to pick it up with a limit order. When the market's like this, that's fine, but there were a lot of times that he got left on the sidelines because the market, if it was moving too quickly, obviously didn't look back. And we kind of got the churn going on now. Well inside yesterday's trading range. Just reference the daily chart for that, give you a snapshot. Where did I put it? There you are. So if you thought yesterday was a quiet range, this is today. We're trading well within yesterday's very small trading range. This bar right here, Wednesday's session, that really put a bullish slant on the market. Even though, the rally occurred like in the space of 15 minutes after lunch, and the highs and lows were really, really congested. The fact that the market finished so high, nearly finishing on the high of the day, that is a very, very bullish bar. See, the same thing happened here in reverse. And then we had a couple little sideways days, and then down she goes. Same thing is likely to happen here. We're going to either see some sideways days or maybe even a little bit of a pullback, maybe get down here to 6,700, maybe even as low as 6,650. And then it's likely we will see another rally. Those are the tendencies, anyways. Obviously, the market will do what the market will do, but those are your tendencies. Overall now, I think all our charts are a little bit more in sync to the buy side. Geiger counters dip in here a little bit, but still makes me wonder whether they're just churning the market about. A little bit slow for a Friday. Ho hum. The trading equivalent of watching paint dry. We might just be out of time. I don't mean out of time that the session is ending, but out of time in that we've already seen the move of the day as quick as it was. We're only an hour in. Here we go with a number 3 signal. I don't know. Let's see where we are in the bigger scheme of things. Well, I suppose you could shoot another trend line right there. We are against the ATR, however, which is a little bit of a concern. Here now, the second push opportunity. Which, when in doubt, is always the best scenario. Wait for that. You never want your entries too tight, regardless. You don't want to be one tick above that trend line. You don't want to be one tick above the high of this bar. The market has a tendency to give you a one tick trend and then very often will reverse and go the other way. All right, here we go again with another hard edge bounce, another number 3 signal in the making. We only have the warning dot right now, but I can anticipate it because, of course, the market hitting the hard edge there. I'm still playing the first number 3 signal. And a fair amount of slippage on that, but some decent follow through. Oh, come on. Here, we'll make Scott happy. We'll go break even +2. Yeah, we're definitely a little bit thin here. This has been an issue this last week. It isn't normally, but I may start moving into stop limit orders just to try to reduce some of that potential slippage. And look at the struggle as we get here toward the high of the opening range. Well, a good signal, a crappy fill. Had I got filled where I wanted, I would have made my profit objective, but oh well, that's trading. And like I said, the market definitely a little bit on the thin side right now. What's with that? So if we deemed this to be a trading range, we've just seen the breakout. You could throw your just in case order up here. But what I would prefer to see is I would like to see at least one bar try to recover the trend, and that would definitely open up the possibility of a move lower. Because all I would be looking for now is a failure. All right, there's my bullish bar. So I know there's buying down here. I can throw my just in case order to short down here. I could put a buy order above here as well. We're actually getting another number 3 signal. We're starting to lose some of the bullishness. We're certainly against the ATR, well against the ATR. Look at it, it's way up here. The fact that we broke this high and did not follow through very well is what is making me think maybe, just maybe, the market will try to head lower. Now, depending how aggressive you want to be on this, you could take a look at the next sell signal, which technically will be a number 2 signal, even though it may not print as a number 2. What we're witnessing right now is a retest of the high. And if we come back with a sell signal, that will definitely qualify as a number 2. Oh, look at that. All right. Once again, trend trumps all. Oh, I suppose I should have had my just in case buy order up here. I should have left it there because the market was in a bit of a pinch. Oh well. Didn't cost me anything to be wrong. That's always a bonus. Look at that little flurry of buying going through there. Still. Well, that now looking very much like the follow through, the second leg, if you will. Oop, this was the original. So this was leg number one. Then we had a very, very long protracted leg number two with a little bit of a sideways drift in there. Pretty to look at because we, had a decent buy signal, decent break of the trend line. We saw it coming the whole way, but in reality, it would have been very, very difficult to manage your trade through this portion right here. The tendency would have been to, even if you ran a deep stop, your tendency would have been to roll your stop. If not at that swing, probably break even, and it would have been heartbreaking to get tagged off of one of these reversals only to watch the market go on without you. Although there was another opportunity to get in right here, another hard edge bounce. One of these charts that'll show up in a textbook somewhere, but doing it in real time would have been a little bit more difficult. You should never beat yourself up for missing a move. You're gonna miss moves. It's part of the process. And you should, like I said before, you should concentrate on your profit objectives when you can get them. I think in the long term, it will serve you better. Although 3 or 4 times a month, we do see a very, very strong trending market. Mark says it's a lot of confluence around 69.38. That's where he's looking for the market to go to next. May not go straight there, but it will be a significant level yet today. We'll see. That's also going to put us near yesterday's highs. Kind of halfways here between the primary resistance and the secondary resistance. After that big push through there, that kind of puts the bulls in the driver's seat. So here again, you could be looking for, almost any reason to get long. Here's a late filter entry signal with a second push opportunity, no less. Not quite as, the trend line's not quite as flat as it was back here. This a little bit more desirable. But hopefully the second push will keep me on the right side here. Sorry, I was leaning on my mute button. um, what we saw going on here. So we hit the break even. I I was a little bit quick with my stop, rolled my stop in a little bit tighter. Might have been a little bit too fast with it, but we were reacting here to the primary resistance line. So I grabbed a couple dollars out of it. Had I gotten a slightly better entry, I would have made the profit target. It's that kind of day today. The Geiger counter getting a little bit more bearish now. Yeah, way to go, Mark. Mark says, I got that one. I might be done for the day. It is slowing somewhat. And maybe they're going to try to turn over here again. Definitely slowing down, no question. Taking a little bit of a bounce off of the primary resistance line. Yeah, it is Friday after all, Mark says, and you're absolutely right. Great week here. Mark says, overall, great week again. I sat on my hands on FOMC day, that was yesterday, but did well on either side of the day, finishing up with over $6,000 on the week. Nicely done. He says, I actually did wax the car on FOMC day, ready for the winter and my 2-week trip to see my kids in Colorado next month. Scott, nice to see you, Scott. Scott says, happy Friday, E. Right back at you. Any word on Ninja 8 Trade Manager? Okay, here's the scoop. The trade manager, the programmer responsible for that, he is still having issues with Trade Manager. You know, every time I ask him, he says, "Oh, it'll be ready in a couple of weeks, ready in a couple of weeks." So I just don't believe him anymore. We've actually got another program coming up. It's called we're calling it the Trade Calculator. It does much the same things as the Trade Manager. It, however, is indicator based. So it does not have those programming conflicts that we seem to have with the Trade Manager all the time. Look for that within the next 2 weeks. We do have the software. I'm just working on getting everything online, and so we do have a Ninja 8 money manager type software available. Unfortunately, it is not the Trade Manager. When and if the Trade Manager issues with Ninja 8 are ever resolved, you guys will be the first to know about it. But the good news is we will have a Ninja 8 solution. Yes, well, Mark says indicator versus strategy based and hopefully less resource hungry as a result. Mark writes, and yes, I think that's been part of the problem. Not being a programmer myself, I'm kind of, taking what they tell me and trying to digest it. But the good news is, like I said, we will have a solution available. And that will be out very shortly, just as quickly as I can put everything together. And that means that very soon I will be having to move over to Ninja 8 as well. And that's a whole other story right there. That's a whole other set of challenges. All right, gang. Oh, here before we go, David asks, Eric, what is the overall advantage for Ninja 8 versus Ninja 7? And Mark asked, maybe they can do the same for Ninja 7. Yes, I do believe we can reprogram the trade calculator for Ninja 7 easier than trying to move to Ninja 8. Ninja 8 does a couple of things differently. Unfortunately for us, Ninja 8 was not just an upgrade of the Ninja 7 platform. It was a complete rebuild. And that's where the problem originates. In spite of what NinjaTrader says, they are still tweaking Ninja 8. They still come up with little bugs here and there that they have to rectify, usually on the strategy end. And that wreaks havoc with the program, because if any of you have ever dealt with anything program related, you know there's a serious domino effect involved. You make one little change someplace and then a whole lot of other dominoes fall, And sometimes you end up having to rebuild the software from scratch. Now, that was exactly the case with Ninja 8. We had to rebuild all the programs from scratch. Fortunately, most of them were pretty straightforward. The DTS system, the Raptor, a lot of the programs, because they're based on algorithms, were it was a job to do, but they were rebuildable. But because the trade manager relies on the NinjaTrader strategy itself, if they make any changes in that, there have been times that we've been very close with the Ninja 8 trade manager. Ninja would make one little change, and I remember one time in particular, Anthony, I thought he was going to come through the phone. He literally had to start over again. So all the work he had done up to that point was for nothing. Very, very frustrating all the way around. Not just for us, but for you as trade manager owners as well. Ninja 8, yeah, like Mark writes here, Ninja 8 is supposed to be designed to make better use of the computer cores and resources, from my understanding. Because so many computers are multi-core processors now, that's what Ninja 8 does. So it's graphically, it's a little bit more pleasing. You know, it's like going from Windows 98 to Windows XP, so the graphics are prettier. That's been the biggest change as far as from Ninja's point of view, is that they have a more pleasing graphic, and it utilizes the independent cores of most computer processors now. So in theory, it should make it faster, should make it a little bit more efficient. I've played with it a little bit. Performance-wise, I haven't noticed anything different just yet. We'll see when I make the full conversion from NT7 to NT8. But it is NinjaTrader's sandbox, so you know they do what they want with their software, and then that leaves the rest of us to pick up the pieces, if you will. But yes, you can look for that in the coming weeks. I will get it out, as I said, just as quickly as I can. Mark's not liking my my Windows analogy. Yeah, David says the only big advantage I saw was that instead of open workspaces, you have tabs on the bottom of the screen, similar to Excel sheets, easier to see other markets. Yeah, Scott says Ninja 8 runs all 4 processors and Ninja 7 only uses one. Scott says Ninja 8 has a nice feature to run what would be considered a task manager to see what indicator is using what process percentages. And that is very geek speak and a little bit beyond me. All right, gang, I think we're going to button up shop here for the morning. If you are continuing to trade today, wow, what to expect? Well, Mark seems to think we're going to slip up here closer to 69.40. We're certainly in the neighborhood. I don't know. We've seen a decent move lower. We've come back all the way. We're right back pretty much where we've actually exceeded today's highs and trading near yesterday's highs. It's a Friday. I think we're going to see the market continue to waffle. Maybe, just maybe, we'll get a retest of this zone down here. But Yeah, we're in an uptrend, but just barely so. So you probably want to favor buy signals over sell signals. There you go. There's my 2 cents worth to see you through the rest of Friday. Otherwise, I will see you guys on Monday. We'll talk to you next month. See you then. Bye for now.